What's up guys, welcome back to my channel. My name is David Hanlon, aka the Laptop Legend. Long time no see, I know, it's just been really slow and honestly there really has not been that much to talk about in the OTC land. It's kind of sad because I felt like we were getting hotter there for a second, but this, probably the past week has just been, for me, I feel like it's been the slowest period that I've had this year, honestly, which is crazy to say because it got pretty slow at some points during the summer there, but my goodness, I mean, it's just been rough. So I'm gonna show you guys kind of, you know, what's been going on with me. And in this video, mainly, I just want to talk about some key takeaways that I've been learning over the last couple of days and just in general, specifically regarding trading listed stocks and the best way to do that. I was talking about that with some of you guys in the Discord, and you know, I figured it'd be easier to make a video, and I haven't made one in a while, so that's mainly what I'm making this video for. I'll probably also talk about, you know, some of the other setups that have been going on, but you know, for the most part, it's been pretty lame, guys. So I'm still hoping that we get some hotter market periods in the next couple of months, because it is like pulling nails right now out there. And if you're starting with a very small account, I'm sorry, it's so much more difficult to make money with a small account when it's this type of market. I can still make money because I can scalp with really big size, but if you're under PDT, man, ooh, this type of market is really, really tricky. So I really apologize to everyone who is currently under PDT, but it's a good time to learn so that you're ready when it does get hot. So that's why I'm making these videos. Hopefully you enjoy them. If you do, please remember to smash the like button, leave a comment, and subscribe if you haven't already. And without further ado, let's get into it. All right, guys, so I'm here on my laptop, and this is the chart for BABA today. This is actually the intraday 1 minute chart, zoomed in a lot, so this is just the morning. But what I want you to notice about this is the fact that it's holding pretty much a downward channel. And if you don't know what that means, I'm gonna explain it for you. So a downward channel is where a stock is in a downtrend, but it's pretty much bouncing between two lines. So it's like this. And if I draw some lines here, you'll probably be able to see that. So you can see pretty much starting here, you can pretty much draw a line. And you know, I guess if you wanna be a little more exact, you know, you can put it here. And it doesn't bounce perfectly off of it, but it's pretty close for the most part. So if I go and undo that, just so you can see, I would say the main one, let's go undo. So we'll keep it like that. And you know, every time it's bouncing off of it, it's kind of bouncing, I would say, kind of off this area. Now, again, it's not a perfect downward trending channel, but you know, basically the pattern is it'll dump, it'll rip up, it'll make a lower high, it'll dump, make a lower low, it'll bounce up, make a lower high, and just keep following that pattern. So this isn't as clean as a lot of channels you get where it's like perfectly defined lines, but this is kind of the main picture that I want you guys to see when you're looking at this chart. So what I found for me personally is when I'm trading listed stocks, they can be a lot more aggressive and a lot more, I don't even know what the word is, like a lot more stubborn than an OTC stock, in my opinion. And it's really hard if you're trading a listed stock to trade it the way that I typically trade my OTC stocks and the way that I typically, you know, teach on this channel to trade. So if I'm trading an OTC stock and I buy it and I'm not immediately positive, or you know, maybe it down ticks a little bit, like 1 or 2, 3 ticks, whatever. But if it goes if it goes farther down than that, I'm out, guys. I cut it and I get out, and you know that. But you can't really do that on listed stocks because you can see here, I mean, they're really choppy. Like, depending on where you buy, it's a very, very low chance that it's never gonna touch that price again, you know, before it goes on an actual move. So how do you play these correctly, you might be asking? And the way that you do it is, well, I guess the way that I've been doing it recently, that I've had a lot of success with, is using actual stops. Now, I only use mental stops on OTC stocks, but I've actually been using actual stops on listed stocks, and they've been working pretty well for me. So one thing you have to consider is the float size. If you're trading a super low float stock, it's gonna be extra choppy, especially if it has a huge float rotation. You know, if it's trading 200 million shares in a day and it's a 5 million float stock, it's gonna be so crowded that, you know, it's gonna have huge wicks all over the place. And if you try to use a stop there, you're pretty likely to get stopped out. So you gotta consider that. Now, BABA is on the New York Stock Exchange. It's not, you know, it's not a micro cap, it's not a low float stock. So because of that, there's really, really good liquidity. I mean, you can see here, pretty much every single bar has at least 100,000 shares traded, and that is on, you know, $166 stock. Now, I don't have my calculator out, but I'm pretty sure that's more than $1 million a minute, if I'm not mistaken. My goodness. Is that $16 million a minute? I could be wrong on that. It's a lot of money, guys, whatever it is. I think it's like $16 million a minute, at least in this point. So the point of the matter is, if you have stops on a stock like this, you're actually going to get out pretty much right at your stop price. And that's going to be a lot better, because if you have a really big seller that comes in on a stock like this, you know, it can drop pretty quickly if you don't have a stop. So if you have a mental stop on something like this, if we get to, hold on, let me go right, need the cursor tool real quick. Let me go right here. You can't really tell, but watching this live was insane. I mean, there was just like massively out of nowhere, a ton of selling volume came in, and this thing just dumped ridiculously hard. If you tried to like manually react to this, you would have gotten absolutely wrecked, man. But, you know, if you have a stop loss in, and a stock is this liquid, if you're trading large caps, you can actually get out pretty much right at the price that you want with a lot of size. Like, I'm trading small size on these things, and I get out instantly. But like, you know, if you were taking bigger size, you could still get out pretty nicely. So that's what's great about, you know, trading these large caps like this. Now, if I go into my actual trade, and this was just one trade, this is just one example, guys, but this really illustrates how you should be using stops on these listed stocks if you want to make money trading them. Now, I am not an expert at this by any means, so you know, if someone out there knows better strategies, knows better ways of doing this, feel free to let me know down in the comments below. But I'm just sharing with you guys what I have learned. So the way I've learned it is you want to go and basically follow the trend of the overall stock. So if a stock is going straight up all day long, you shouldn't be trying to short this thing if it's a listed large cap, because it's just going to keep going and keep going. You're going to keep stopping out and take a bunch of paper cuts. What you want to do is you want to get in and keep following the trend at a point of like a reversal or like a little bit of a pullback. So in this case, you know, this stock is on a downtrend, right? It's making lower lows and lower highs. But I made money longing this thing because I got in towards the bottom side of the channel when there was a mini reversal pattern. A mini reversal pattern. So let me explain what I mean by that. So if I go zoom in here just a little bit more, so you guys can see, I got in right here. And I got in right here because it was making a mini descending triangle after it had already pulled back, and it's already holding, you know, this downtrend line. So I mean, if I go right here, I guess, you know, that's pretty much right where I bought. I bought right here, and I bought 500 shares at 165, it's 165.7684. So 165, call it 77. So right there, I bought 500 shares of this stock, and it was a really good entry. And the reason for that is it's right at kind of like the bottom side of the down channel, and it's really, really, really good risk reward. Because to break this mini pattern, all it needs to do is break down below this low right here. So I'm buying right here at, you know, 67, and this low here is, hold on, gotta triple check. Yeah, sorry, I flipped that. I'm buying at 76, call it 77. I'm buying at 77 here, 165.77, and I'm risking 165.60. So I'm risking 17 with slippage, call it 18 cents a share, right? And the upside on this thing, if it actually bounces, is, you know, let's see, from 77, I would say easily it could make it to 167, if not 167.5, just by looking at this. And this was my thesis. And that's, you know, pretty much what ended up happening. So it made it almost all the way up there. Now, this is exactly what you want to be doing on these stocks. You want to be getting in on a pullback that follows the overall trend, and you want to be getting in at a point where you're very close to your stop, but where your stop is actually at a meaningful point on the chart. And I know that's a lot of like different things to juggle at the same time. So let's break each one of those things down. So if I'm going long here, I don't want to be longing just at any old point on the chart, because, you know, this thing is it's kind of dumping all day long. But if I can see that it dumps, followed by a bounce, followed by another dump, followed by a bounce, if I get in after the second dump, I'm looking pretty good for a bounce there. That's just, you know, it's what the stock is doing. It's the pattern the stock is following. So if I get in on a pullback there, my odds of a profitable trade are better. So that's factor number one, following the overall trend of the day. Not buying, for a breakout, thinking, oh, it's gonna go way up here. No, I'm buying on these dips because it's dipping more, and then it's bouncing, and then it's dipping even more. So if I want to get in for a long, I would have to be getting in on a dip here. If I wanted to short this thing, I would short it into a bounce as it's failing. Now, the second part of that is the stop. So if you look here, if I'm buying at 165.77, if it's gonna break this mini wedge, this mini descending triangle, and I'll actually draw it for you guys so you can see. Forming this descending triangle right here. If it's gonna break this, it's gonna do it right here, and it's gonna make a lower low, and it's gonna break the chart. Which means that I'm only risking 17 cents for over $1 of upside. That's at least, 5 to 1 risk reward. 6 to 1, 7 to 1 risk reward. That's a really good risk reward trade. So I want to be looking for a trade where if I stop out, it's going to break a part of the chart that is important. This mini, I would say this mini descending triangle here. Beautiful risk level here, and it should be bouncing. So those are kind of the three things that I look for. Again, I look for the overall chart, and I want to get in at a point that follows the overall pattern, and I want to look for a mini, I would say, like a mini pattern within the overall chart that gives me a great risk reward opportunity, and a key stop level that I can get in close to, but that I'm not just going to get stopped out meaningless. If I bought, hold on, let's see, this always happens. If I bought, say, right here, as it's breaking out, risking, I don't know, 17 cents a share, I would have gotten stopped out here on this red candle. Or if I bought here, but I was risking down here, that's too much risk. So you guys see, all these different factors have to perfectly align for it to be a good trade. So if you're just buying at any random spot on a listed stock chart and having a tight stop, that's a bad trade. You're just going to get stopped out. If you're buying at any random spot and risking a smart point on the chart, that's a bad trade. You're too far away from your stop. The risk reward is not good on that. And if you're buying, at any random point that doesn't follow the overall chart, that's a bad trade. You got to follow what the chart is doing, because these things are they're just going to steamroll you. They don't care about you. They're going to follow the pattern that they're going to make. So you have to go with the flow on these listed charts. So that's the thing that I want to ingrain in you guys. Just because a stock has just because you have a stop loss on your trade does not make it a good trade. If you guys just go randomly buying these stocks, well, I'm going to buy right here and put my stop at the low of this candle. Why? That means nothing. How does that break the chart? It doesn't make sense. Or I'm going to buy right here, but I'm going to put my stop down here. You're risking $2 a share, and what's your upside? So these are all the different things that you have to be juggling as you're looking to make these listed trades. So that's kind of just what I wanted to talk to you guys about. And that was my trade here. I made just a couple $100. I think maybe 300 or something like that. I ended up buying again at 500 shares at 165.76. I sold 250 shares at 166.46, and then I sold 150 shares at 166.33, so I had 100 shares left. And then I rebought some on this little dip here. I rebought 150 shares, so I was back up to 250, and then I sold them all at one. Well, I guess no. I sold 150 at 166.94, which was right there. And then I sold the other 100 at 167.30, which was right there. So it was a beautiful trade, perfectly executed. But I locked in my profits because it was coming into the downtrend line. Again, I know that once this thing bounces, it's likely to fail. It's likely to fail because that's the pattern it's been following all day long. Dump, bounce, fail, bounce, lower low, bounce, fail, bounce again, another lower low. So this is just an example, guys. And this is how I like to look at these trades. So just keep that in mind. You know, you gotta keep in mind all the different factors. If you're buying a stock that has a ton of crazy wicks, you know, you see wicks like this all over the place, you're gonna have to be even wider with your stops. You know, maybe if you're buying here, well, I guess you gotta give it a little more time to develop, I would say. But you know, if we get another downside here. Yeah, so maybe you're buying here and you're risking this one. You're buying here, instead of risking this low, you're risking this low if it's a choppier stock or something like that. So you can always risk the next low. And I guess I want to pull up SPY just for a second to show you guys. This is an example of a really good uptrend. A really good uptrend. So you guys see this thing rips out of the open, makes a mini flag, pushes higher. Mini flag again, pushes higher. It never makes a lower low. So every single time, you know, if you're trying to short this, you're thinking, man, this thing's too overextended. This thing is straight up. You would just get stopped out over and over and over again. So the best thing to do on this is go with the trend, guys. You know, you can buy these dips, risking the next low, and then just ride it up until it puts in a trend change. Now, my mistake on this one was not shorting it, because I was looking for a short on this, and I just kind of underestimated how aggressively this thing would dump. So I almost shorted this thing when it made a lower low, but then I didn't. And then it bounced back up, failed here. I should have shorted here as well. I didn't. I missed it. It came all the way back up here, and I was thinking, all right, well, it's going to run into this resistance from these other days. You know, it's running into this resistance here. It's running into this resistance $1 higher right here where it failed this day. So I just don't think there's that much upside, so I don't really want to long it, but why did it come all the way back? I should have shorted it. I should have shorted it. It was a great short. You guys can see, one day. You guys can see, you know, it failed. If you short it into this bounce, risking high a day, it never broke high a day. It never did. And it went on to dump from there, I mean, a ridiculous amount. If I'd shorted, you know, 500 shares on this thing, my goodness, I would have made a lot of money. That would have been an amazing trade. So this is the type of thing I got to learn. And, you know, this is pretty similar in the fact that, you know, a lot of times these stocks will just, they'll follow these patterns, they'll follow these trends, but once they're broken, man, it's kind of game over. So it formed a new trend here of making lower highs and lower lows. Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, etc., etc. And typically the thing that I look for is the next high. So you can see here, you know, it failed, it bounced, it failed even lower. It did break this high, but it never broke the next high, and then it just kept breaking down. So that's another thing you want to look for on these listed stocks. If you want to be extra patient, you know, you can risk the next high, because a lot of times, you know, if it gets too sold off, it'll bounce, make a higher high, but not break the next one. So that's kind of the real trend change. You really need a higher high and a higher low, and then break those highs. I would say that's more of the trend change. Now, this is already a long video, guys. Honestly. I might not even, I guess I'll mention the other stuff. You know, ILUS, it's had a pretty nice bounce from those lows the other day. But you can see, I mean, it's pretty much straight up from 25 at this point. So I'll be looking to see what it does. I think it's running into some resistance here. If I go to the 15-day. Yeah, it's kind of running into some resistance here from these days, I would say. Me personally, I'm more short biased on this thing tomorrow, but I guess we'll have to see what happens. CYBL, it's had 2 days of nice consolidation at 3.8. In this choppy market, guys, honestly, I don't expect it to do too much, but you know, when it holds these levels this nicely, after bouncing this hard, I guess I'll pull it up so you can see, you know, it's held this level really nicely. So it could end up going higher, but it tried at late day and then just stuffed. It failed, so maybe it ends up dumping again. I'm not sure. MMN, is that what it was? No, MMTLP. This is the craziest chart, guys. I have to show you for those who did not see it. Let's go 5 days. I mean, this chart, to give a tiny bit of background, basically this is the stock that allows people to have their to receive their dividend of some preferred shares, pretty much of another stock. I don't understand all of it too well, but moral of the story is this is probably one of the craziest charts you will ever see. I mean, this thing had, I think, the most green candles ever known on the face of the earth, except for FNMA that one day back like 10 years ago. That's crazy. That's a crazy story. I'll have to review that chart at some point. But I mean, this thing was just nuts, absolutely nuts. And I blew it. I really did blow it. There were no shares of short. I came across it, I think right at like $2. Tried to buy it on E-Trade, couldn't get filled. Ended up not trying on Schwab until on this dip here. Got stuffed, and then kind of gave up on it a little bit and didn't make pretty much anything on it. So I should have taken more size on this dip. I just wasn't super confident because it was very sketchy price action on the way up, so I wasn't confident it would bounce. I mean, it bounced really nicely. And then it went on another run today and tested those highs. I got washed out. So we'll see. But yeah, just pretty interesting chart there. That's pretty much it, guys. I mean, I'm loaded on swings. I just bought some other swings today, so you know, it is what it is. I'm still chilling. It's just a slow market, guys, so just hang in there. Hopefully we'll get hotter, and you know, start to practice. Look for these listed things. Take them with one share. Seriously, practice them with one share until you can get them down, and slowly scale your way up. That's the way to do it. And just because you stop out does not mean it's a bad trade. If you get, you know, a good odds trade with great risk reward, if you stop out, that's fine, man. That's totally fine. It does not mean it was a bad trade. So that's it. I'll see you guys in the next video. Until then, you know the drill. Let's grow better together. Bebé, dime por qué te mientes. No puedes esconder todo lo que tú por mí sientes.